Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Meta stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 1.2 trillion market cap. They're trading at $4.88 a share, and they have 2.5 billion shares outstanding. Meta develops products that enable people to connect and share with friends and family through mobile devices, personal computers, and virtual reality headsets. The company has two segments, Family of Apps and Reality Labs. The Family of Apps segment offers Facebook, Instagram, Messenger, and WhatsApp. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had another record quarter just recently. They knocked it out of the ballpark. Their free cash flow is higher than ever, almost 50 billion. Really amazing margins. They convert 1/3 of their revenue into free cash flow. It was low in 2022. They were investing a lot into CapEx. They're still putting a lot into CapEx. It's just that their revenue, their ad revenue is so high that it makes their free cash flow look enormous. Net income is the profit or loss on the income statement. It's revenue minus expenses. Another record, they passed 50 billion. That's for the trailing 12 months. Some companies have been in operation for 100 years, and if you sum up all their net incomes for 100 years, they're not even close to 50 billion. I'm talking about public companies, not small private companies. Revenue is a sales for the company, and that goes up each year from 117 billion to 150 billion. They do pay a dividend, 0.41%, which cost them $5 billion, a drop in a bucket. They can cover their dividend 10 times. You don't have to worry about the dividend being cut. If anything, they're going to raise the dividend. We estimated 4 years of future free cash flows. We also estimated a terminal value, it's all cash flows. Past year 4, that's 1.2 trillion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $1.1 trillion. We divide that by 2.5 billion shares. And we get a calculated stock price of $4.37. They're trading at $4.88, so they're trading at a 12% premium. It's a sell according to the model. If I can grow their free cash flows another 3 years into 28, 29, and 30, I'll come up with a lot different number. Let me show you. If I go behind the scenes of the model and go out another 3 years, my value is 1.5 trillion, 582. If this was a stable company that didn't grow much, you don't even have to estimate 2 years. You can just go out 1 year and calculate a terminal value. But a company like this that's growing at a massive rate, it does make it a little harder to value. Because you have to remember, DCF models are an art, not a science. There's no one right way to do it. There are 64 companies in the same industry as Meta, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. Look how much they spend in CapEx, and it's dwarfed by Google. Google spends so much more. Meta has a good debt to equity ratio equal to the median. They're finally paying a dividend. Google pays a dividend, but most companies do not pay a dividend in this industry. They generate so much free cash flow, a lot more than Google as a percent of their market cap. They have a better price to free cash flow ratio. In terms of dollars, Google spends the most. Google's a $2 trillion company, the 4th largest in the world, behind Apple, Microsoft, and Nvidia. Amazon is the 5th largest in the world, and Meta is the 6th largest in the world. I'm pretty sure I got that right. Feel free to correct me if I'm wrong. Price multiples are getting a little rich. They're trading at 24 times earnings, 25 times free cash flow. But the reason people keep bidding up the stock is because they're growing. Their 5-year annual revenue growth rate is 19%. They generate 150 billion of revenue. Google is more than double. So Google generates more revenue in dollars and as a percent of market cap. They have a better price sales ratio. If you're like me and you put $10,000 into this company 10 years ago, you'd be a happy camper at $68,000 today. Actually, I put a lot more than $10,000. I actually put $10,000 12 years ago, the very first day they started trading. And then I added another 100,000 in 2017 and another 100,000 in 2022. Let's take a look at their income statement. We'll go through the latest 10Q. 39 billion of revenue for the quarter. By far their best ever. Last year was 32 billion. Let's get a breakdown of the revenue, even though we know what it is. It's almost all advertising, 38 billion. Other revenue, 400 million. Then you have virtual reality, 350 million. 14 billion of the 39 billion is US and Canadian advertising revenue, 9 billion Europe. Europe includes Russia and Turkey, and the rest of the world, the 4.3 billion. That includes Africa, Latin America, and Middle East. APAC is 11 billion. Revenue is up in every single section. Revenue and family of apps, 39 billion. Expenses, 19 billion. So their operating income is 19 billion, which is a 50% margin, up from 41%. Reality Labs, they're still losing a lot of money. Revenue, 350 million. Cost of revenue, 4.8 billion. Hopefully this improves, because it's a big negative, negative 4.5 billion. Overall revenue is up 22%. It's up 22% in advertising. It's up a little more in Reality Labs, 28%. But I want to see that going up like 300-400% because it's so low. Let's go back to the income statement. Below revenue is cost of revenue, 7.3 billion. Cost of revenue is 19% of their revenue, same as last year. R&D is 10.5 billion. R&D is down, it's 27% of their revenue, last year 29%. It is up on a dollar basis, but down on a percentage basis because revenue went up a lot faster than R&D went up. Marketing and sales went down, it's 2.7 billion. That's 7% of their revenue, last year 10%. G&A 3.6 billion, that's also down. G&A is 9% of their revenue, last year 13%. So total expenses 24 billion, up from 23 billion. Total expenses are 62% of their revenue, down from 71%. They did lay off a lot of people. Operating income 15 billion, up from 9 billion. Operating margins 38%, up from 29%. Net income 13 billion, up from 8 billion. A lot better margins. Net income 34%, that's their net income margin. Last year 24%. Earnings per share 531, last year 303. Shares outstanding are down a little bit. It's currently 2.53 billion. Let's take a look at that balance sheet. The first section is assets, 230 billion. Pretty much the same as the end of 2023. Their biggest asset is property and equipment, 100 billion. Here's a breakdown of the 100 billion. The gross value is 140 billion, and that's mainly servers and networks, 56 billion, and buildings, 43 billion. Also 22 billion of construction in progress. But they depreciate these assets. They don't depreciate land, but they depreciate the other assets. 38 billion of depreciation. So the net value is 103 billion. That's what we see in the balance sheet. They're very heavy in the cash, 32 billion of cash. That is down from 42 billion. Also 26 billion of marketable securities. So that's like 58 billion of cash. 14 billion of accounts receivables. This is when they sell on credit and their customers have to pay them in the future. 21 billion of goodwill. Goodwill is a premium you pay when you acquire another company. Their total liabilities are 73 billion. Their biggest liability is long-term debt, 18 billion. Actually, no, their biggest liability is accrued expenses, 22 billion. And they do give a breakdown of the accrued expenses. Legal accruals, 8 billion. And accrued expense are liabilities that have built up over time, and the company has to pay them at some point. Kind of like your electric bill each month. It accrues throughout the month until you finally pay it. You're using electricity for free. You don't pay for it in advance, you pay for it after you use it. Accrued compensation is a popular one, 4.1 billion. Accrued taxes, 2.2 billion. Property and equipment, 1.8 billion, and other, 5.6 billion. They also have 18 billion of long-term debt. Assets minus liabilities equals equity, 156 billion of equity. They raised 78 billion from selling their business. They profited 81 billion from running their business. Their retained earnings will be a lot higher if they didn't buy back so much stock. It would probably be like 500 billion. Let's look at a statement of cash flows. This is for the trailing 6 months. The first section is operating cash flow. They generated 39 billion from running their day-to-day business. Operating cash flow is net income converted to cash. Investing cash flow, 17 billion. This is when they invest in their company, when they buy PP&E, or when they acquire another company. 15 billion of PP&E. This also shows the investment or sale of marketable securities. They purchased 10 billion of marketable securities. They sold 7.9 billion. In their financing section, it shows you debt and equity. They paid $6 billion in taxes from equity awards from their employees. They bought back $21 billion of common stock, double last year. They paid $2.5 billion of dividends, so they had a cash outflow of $30 billion in their financing section. Let's take a look at their presentation slides. Here's their advertising revenue breakdown. Actually, they had more advertising revenue 2 quarters ago, the fourth quarter of 2023. It's usually highest in the fourth quarter, but it's grown a ton when you compare it to the second quarter of 2023. In the US and Canada, their second highest ever, $16.6 billion. It was almost $18 billion in the fourth quarter of 2023. Their second highest ever in Europe, $9.1 billion. Their highest ever in APAC, and their highest ever in the rest of the world. They're still growing in the US, but they're growing a lot more in other countries, especially Asian countries. I'm just guesstimating numbers, but they probably grew 10% in North America and Europe, and over 20% in Asian countries. This page is different. It's a total revenue, but it's almost identical to the first page because 98% of their revenue is advertising revenue. Here's the numbers in a different format. Advertising revenue went from $28 billion in Q2 2022 to $38 billion currently. It was a little higher 2 quarters ago, as we mentioned. Total revenue, $39 billion, a little less than 2 quarters ago of $40 billion. Operating income really strong in family of apps, as it's always been. It was $21 billion at the peak, now it's $19 billion. And they're still burning cash in Reality Labs, negative $4.5 billion. I really hope they get that under control. The past 4 quarters, margins between 38 and 41%. Before that, it was between 20 and 29%. So they're much more efficient. They're doing more with less people. Expenses as a percent of revenue are going down, as we saw in the 10Q. Cost of revenue is 19% of their revenue. It was 18% last quarter, but it was in the low to mid 20s in 22 and 23. R&D is 27% of their revenue. It was 26 at the low, but it was in the 30s in the past. Marketing and sales is at the lowest point ever, 7%. It was double that, 14% in 2022. G&A is 9%. It was 6% at the low. It was as high as 13% in Q2 2023. And they're paying less in taxes. 11% is their effective tax rate. It was 24% in Q4 2022. Net income, their second highest ever, $13.5 billion. It was $14 billion 2 quarters ago. But when you compare it to last year, it's up like 80-something%. EPS, $5.16. It was $5.33 at the peak. It's up probably 65 to 70% from last year. CapEx, they're still spending a lot in CapEx. $15 billion year to date. A lot more than last year, $13 billion. For the quarter, $8.5 billion. When you compare it to the same quarter last year, $6.4 billion. A lot of companies are overspending in AI CapEx, especially the Mag 7. Their daily active users are still going up. It's a little less than half the world, 3.3 billion. It's just mind-blowing how many people use Meta. A lot more people use Meta than Apple products, but I think Google is used more than Meta. There's a big difference between Google and Meta. People use Google to search, so it's used real briefly, sometimes for 10, 15 seconds. You just search something and then you go to that page. With Meta, it's a destination. You go to Meta and sit there sometimes for a half hour, maybe even an hour or two, just reading different things. You spend a lot of time on that platform. Average revenue per person, when you take their advertising revenue over their total users, $11.89. It was highest in Q4 2023, $12.33. Ad impressions worldwide are down to 10%. It's down in every single category, ad impressions. Average price per ad is going up again. It's up 10% worldwide. It's up the most in the rest of the world, 24%. It's up a lot in Europe, 18%. APAC is up the least, only 4%. But APAC was down for a while. It's finally up. This slide shows their free cash flow and operating cash flow. Operating cash flow, $19 billion, almost identical to 2 quarters ago. So for 4 straight quarters, they've been averaging about $19.5 billion. A lot more than these first 4 quarters, averaging maybe $11 to $12 billion. Lots of CapEx spend, so their free cash flow was almost zero in the 3rd quarter of 2022. It's up to $11 billion. Its highest ever was $13.6 billion in the 3rd quarter of 2023. That's also the first time they broke through 20 billion of operating cash flow. Their biggest capex spend was in the third quarter of 2022, 9.4 billion. Second biggest was the following quarter, 9 billion. Their third biggest ever was this quarter, 8.2 billion. Let's take a look at the company on Simply Wall Street. Its last price, 488, 1.3 trillion market cap, up 5% in the past week. I think the only Mag 7 company to be up the past week. They're up 57% in the past year. I remember in 2012, I bought them the very first day they started trading at 40 bucks. They did IPO for the high 20s, I believe, but as soon as the stock started trading, it went up to 40. And I was down like 60% the following month. But if you're smart like me and you held on, you ran up to close to 380. And then if you're not smart like me and you held on, you wrote it down to the high 80s. So I was down like almost 80% from top to bottom. But I didn't sell. It peaked at 540. So I was up like 250% on all my meta. I bought at different stages. I did pick up a lot at like 330. It was 370, then it went down to 330. That was in the beginning of 2022. So I picked up a lot at like 330. And it took me a while to finally be up on that. But I have a good amount at I think 170. It is down from the peak, but still it's done really well the past 2-3 years. Simply Wall Street's valuation is 652. They say they're 25% undervalued. I think that's a little rich. I think they could hit 600 by next year. 650, maybe a little tough. 56 analysts priced the stock at 517. Revenue forecast for this year, 161 billion, then 183 billion, then 205 billion. Free cash flow forecast for this year, 47 billion. Next year, 53 billion. After that, 59 billion. The company was debt-free from 2014 up through 2022. They did add some debt. Now they have 18 billion of debt, which sounds like a lot of debt. When you look at their equity, it's almost like they have no debt. Equity of 156 billion, debt of 18 billion. And when you look at their cash, then you know they have no debt because they could pay off all the debt if they wanted to. 58 billion of cash, 18 billion of debt. They started paying a dividend this year, 0.4% yield. The forecast is 0.5% by 2026. The first dividend payment was 50 cents in February 2024. The second is 50 cents in June 2024. The CEO's salary is a cool $1. Zuckerberg's total comp is 24 million, tenure as CEO 20 years. I think that's a good benchmark. Your total compensation should be around your tenure in terms of millions. If your tenure is 3 years, total compensation should be around 3 million. Zuck has been selling a lot of his shares, which is what I do not want to see, but the stock is so high, so others are doing that as well. Around 130,000 shares sold by insiders in the past year, none bought. 67% of the companies owned by institutions, 19% by the general public, and 14% by insiders. Zuckerberg is the biggest shareholder at 14%. His valuation is 170 billion. Then Vanguard, BlackRock, Fidelity. You have T. Rowe Price, Norges, Northern Trust, BNY, Eaton Vance, Invesco. Their employee count was only 5,800 in 2013. It got to 87K in 2022. Then it dropped to 66K, but it's gone up a little bit, up to 71K currently. The ticker trades on the Nasdaq, Deutsche Börse, Zitra, Mexican Bolsa, Santiago, Swiss, London Stock Exchange, Lima Bolsa, Borsa Italiana, Wiener Börse, Kazakhstan, Bulgaria, Santiago, BATS, Europe, Warsaw, Sao Paulo Bolsa, Buenos Aires, and the NEO. Let's take a look at some employee reviews. A 5 out of 5. Good comp and benefits. Pros, Meta has one of the highest comp and best benefits among tech companies. Cons, with the company so big, it can feel hard to stand out, especially with grammar like that. 4 out of 5. Good. I had a good time, WLB. I had to Google that. Work-life balance. Cons, I had no guidance with the executives. Most companies don't give much guidance. You kind of have to learn as you go. Advice to management, be more present. 2 out of 5, it's okay. No apostrophe in it's. Pros, area is expensive to live in. Northern California is really, really expensive. Cons, overtime working hours is bad. This was a maintenance engineer. Here's a 2 out of 5. Hectic, disorganized. Pros. Meta provides excellent compensation, but poor job security. What does that mean? Lots of layoffs, I guess? Cons. Disorganized. Inspires imposter syndrome to conceal it. No formal engineering practices. Project prioritizations are made mostly based on sunk costs. That is the name of the game with these tech companies, lots of sunk costs. Filled with glory hunters. Glory hunters are people that jump ship as soon as the team has success. Pros, the perks for sure. Free food, flexible work hours, off sites. Cons, a lot of stress, really fast pace. I think stress is partly due to the person. Some people experience stress in almost any situation. Some people experience very little stress. I think a lot of companies have stress. It's how you deal with it. Of course, I understand some companies are more stressful than others, but I think it's highly dependent on the person. 3 out of 5. Laid off. Pros, I got to work with some extremely smart, talented, and compassionate people. Cons, I had 3 reorgs in 1 year and was then laid off after my review, and my manager telling me she wanted to help me get promoted the next year. I always wonder when I hear these things what the other side of the coin is, like how true these statements are. I just have to take them for face value because I don't have the luxury of talking to everybody. 3 out of 5. Arg. I guess this person's a pirate. Pros, best pay, best benefits, decent food. Decent food. Meta is not a restaurant. It's a software company. Cons, no work-life balance, no mental health, toxic team cultures. Advice to management, don't be short-sighted. Maybe they need some glasses. Good package, bad company. Pros, package is above the competition. Cons, lots of red tape, directionless leadership. A place to be. Pros, excellent perks and work-life balance. Cons, not a place for coasting. Embrace the Zuck. This is a former employee more than 1 year. Great pay and benefits. The company is very transparent and open about the direction of the company, though it may not align with what is actually pressing/needed. Cons, Mark would rather protect his Hawaii home than keep thousands of hardworking, great people employed. That's a pretty ridiculous statement. Advice to management, change the direction of focus from VR/metaverse and work to improve projects such as the portal and AR glasses, as they have a greater benefit now to develop the metaverse for the future. Everybody's an expert, right? They always say, this is what we should do. Sonics. That's a weird title. Pros, nice people, somewhat good atmosphere. Cons, overwhelming and very dirty place to work. Advice to management, teach better. Such an eloquent statement. Teach better. 2 words, it conveys a message. Over the hill, former employee in Seattle. It was fun back in the day. It is fun now if you like layoffs. I sense a bit of sarcasm in that. Bad work-life balance. Pros, great pay and can grow fast. Not many companies say great pay, so they must pay really well. Bad work-life balance, high peer pressure. Peer pressure is unfortunately at a lot of companies. Never again TPM at Meta. I think TPM is total productive maintenance. The cons are only the salary and stocks. Culture is very toxic. As TPM, they treat you as a secretary. Better enter as a product manager or people manager. No worth the pain to be TPM and is very different from Google TPM or Microsoft TPM. I'm getting a headache reading this review. Let's just move on. Meta is hiring again. Good pay, bad environment, internal competition. Those are the pros, not the best pros. Cons, too many VPs and senior leaders. There's too many VPs at every company. It's just a title. It means nothing. Good place if you only care about money. Pros, pays well, good benefits, easy to coast. Cons, lack of purpose, promotion is hard, lack of engineering excellence, suffers from big company politics. Roadmaps are very sensitive to stock performance, so reorg is often. Unfortunately, at these big companies, reorg is a common thing. Very bad for mental health. Benefits are good 401k matching. Cons, poor work-life balance, 60 plus hours is a norm. That is a long week. Very low morale. Managers don't care about the engineers. Managers continuously lie to engineers to get them to stay. Near impossible to get promotions. I don't think that's super uncommon. Some companies, it's hard to get a promotion. But if they promote a lot of people, then everyone complains. It's too easy to get a promotion. It means nothing. Advice to management, show some empathy to the engineers. Be more transparent. Let's look at some of these salaries. This is nuts. Software engineer, 220K to 320K. That's a total pay. The base is 177K plus 88K. God damn. a lot of money. Research scientist, 236K to 316K. Maybe I should apply for a job at Meta. Data scientist, 200 to 300K. Every single job is above 200K. Senior software engineer, 300 to 430. 29 open jobs. Software engineer in Washington, $56 an hour. That's only about $115,000. $80 an hour, that's $170,000. Here's some interview information. I interviewed at Meta. Interview. Phone interview starting with introducing yourself, followed by 2 code questions. The first coding question is very standard coding question, and the second one is a little more related to Facebook's certain functionality. What the fuck is he talking about? Or her. Here's another person talking about the interview. Typical interview process with multiple rounds, coding and behavioral, and systems design. There were lead code. Lead code is a program to ask interview questions about coding. So that's what lead code is. There were lead code problems essentially, and system design, and a behavioral component to it. Not far from a normal process at a big tech firm these days. I interviewed at Meta Menlo Park. Hiring manager was great. Recruiter seemed rushed and didn't care. But honestly, she's probably just has too much work. The job description was inaccurate and did not really on some of the key tasks the hiring manager wanted. I hope this person reread their resume and didn't have so many grammatical errors in it as they do here. There are 6 rounds of total interviews. I hate when I go through so many rounds. One company had a dozen interviews. The first is a screen interview, second is a technical screen interview, third is final interviews. I interviewed at Meta London. It was fine. They asked me Ticketmaster question, some lead coding questions, few from tagged, few from not tagged, and etc. I did pretty well, solved almost everything, and was offered production egg roll in the end. These people talk about the benefits of the company, all kinds of free food. Who doesn't like free food? That's my favorite type of food, free food. The best medical health care insurance, great all-round benefits package, great health insurance fitness stipend, generous PTO, sick policy, 401k, and wellness stipend, great benefits, great insurance, great coverage, total compensation and health care packages, and 401k matching. Health insurance is a great thing, very nice. Very nice, sounds like Borat. The full benefits/perks package is excellent. Recharge is 1 calendar month every 5 years. Does anybody know what that means? Recharge is 1 calendar month every 5 years? I googled recharge, but I still can't figure out what it is. Best thing, fertility benefit. Lyra, 25 free sessions. Lyra is a medical insurance company. You get a therapist through Lyra and a lot of other things. And overall salary, negative thing. So the salary's not good. Could use more parental leave time for all genders. All infinite genders, because it's a spectrum of genders. Good health care, however, cutting benefits year over year. The fertility benefits for full-time employees is unparalleled. Customized pharmacy, great leave options. Very comprehensive, and premiums are reasonably low. The company cares about the well-being of its employees and the benefits and how holistic they are. Good company and good benefits. Nothing special other than a stock. This guy is so salty, he can make beef jerky by staring down a cow. Good, not good? What did you think about that joke? Benefits are amazing, better than most companies. 6 months maternity leave, premium insurance, good PTO, etc. Really great benefits package at Meta. Let's read some reviews from Yahoo Finance. This is a few months ago in April. Meta is the best stock investment on the market. I have to agree there. But that won't last long as price goes back to $520. After what Microsoft and Google spent on AI, that makes the amount Meta spent seem like a bargain. Weak investors lose again. And someone replied to this comment, 100% correct. Meta has them all beat. Just look at forward PE and trailing PE. Meta has the fundamentals all covered and has a ton of R&D. In 1 to 2 years, Meta will be number 1. People forget Zuck is only 39 years old and has been running the company as founder and CEO since he left Harvard. Meta will be the most dominant company in the world for a long time. This guy is bullish, 138 average, all from late 2022. I didn't sell in the 500s, but I also didn't sell in the 100s or 200s or 300s. Holding this one for a long time. What do you want, a medal? I'm just kidding, that's awesome. Well done. Meta produces profit just like the Federal Reserve prints money, never ending. Meta is going to 1,000 a share. This blip is a buying opportunity. Agreed. Somebody responded 1,000 a share is probably never happening. I don't know about never happening. The only reason it may never happen is if they do a stock split. But I think it will be 1,000 hopefully in 2-3 years. Fat Finger Freddy. That's a nice name. Okay, we now have a clear trend here. No matter the opening gains, someone big is selling. We need to see those trades dry up before earnings, if we are going to see any new highs. Earnings should be outstanding, but the reaction all depends on whether these sellers are done. Don't forget there is another big buyer of 50 billion just on this time zone. They are buying back because they know where it is going. You can't argue with the numbers. Election year ads are off the charts. AI has clear leaders and earnings growth puts Meta at a big discount at current prices. Anal list. Know this. I never saw it written that way. It's pretty funny. Anal list. Let me comment. Too funny. Meta is the most undervalued FANG stock on every metric. A real value, not hyped blue sky. What's hyped blue sky? I think he just made that up. I never heard that before. This has 79 likes, 18 dislikes. Meta should be 2x of where it is now. Agree. This won't be for very much longer. The cream of the crop always rises to the top. Well said, Beth. Oh, look at that. So well said and so true. Their cream when severely rancid. Call the FDA and place a recall. Wonk, wonk, wonk. Look at this sentence. No way Meta should not be trading in the 600 soon. Talk about a double negative. Just say Meta should be trading in the 600 soon. Get rid of the 2 negative responses because 2 minuses equals a positive. Earnings just too good and very undervalued compared to other big tech. This was 2 days ago. The pace at which the market changes is so rapid that it's genuinely challenging to stay updated. It's very challenging, I agree. That's why I've always leaned on the expertise of professionals for investment guidance. It's the reason behind my consistent success in the market. Oh my God, I wonder who it is. I need the name. I gotta invest with who we invest with. Some might find it hard to believe, but I made nearly 78% in profit over the last 3 months. Of course, there will be haters who'll say I'm exaggerating, but to each their own. Look what Matt said. Your expert is Kramer, probably. Member of his club, too. His results suck. Thank God you're an expert. I never relied on the expertise of so-called experts and have done very well. If I had relied on that, I would have not bought Facebook at 19. When did you get a Facebook at 19? That might be a month after they started trading. In 2012, that is. And would have sold when it was being trashed at CNBC by its experts around 90, not long ago. Find decent high-tech stocks and hold on and be indifferent to opinion of others and or market fluctuations. The global search volume for Facebook on Google has decreased by 61% in the last 5 years. Oh my God, that's not good. Everyone can verify this on Google Trends. I wonder why Meta stock have not been in a downward trend for the past 5 years. Can someone explain this? Yahoo will ban you within the hour. Who cares about search volume? What about revenue, profits, cash flow? That's a much more important stat than search volume. Trading is like flying a plane. It takes skill, discipline, and a certain amount of risk to succeed. But just like a plane needs 2 wings to fly, a trader needs both skill and courage to soar. Fear can be a trader's biggest enemy, just like a bird with 1 wing. This is a weird comment. Without the courage to take risks, a trader will never be able to reach their full potential. I guess I agree there. A trader who is afraid of failure will make decisions based on fear rather than logic. They'll hesitate to enter trades, and when they do enter a trade, they'll be quick to close it out at the first sign of trouble. This fear-based trading is like a bird flapping its 1 wing frantically, going nowhere. A trader who is ruled by fear will never be able to truly soar. I like that ending. I really need to work on this. Fear is my enemy. Well, I think that's most people. We kind of overanalyze situations, and when things are going well, we think they'll never end. They'll keep going well. And when things are going bad, we think they'll keep going bad. But you have to kind of separate that. and just look at the fundamentals. But sometimes even when you look at the fundamentals, you have a slant where if a company's reporting good numbers, you somehow twist it around to make it seem like they're not doing as good as they are. And if a company's reporting bad numbers, it's the same thing. It's like when you're in a relationship and somebody does something you don't like. Say you hate smoking and they smoke, but you justify it. You say, well, at least she has a nice body. But if you've been dating that person for a long time and they smoke, then you really focus on the smoking and you don't notice her nice body anymore because you become complacent. No, their metaverse spending isn't on digital characters and La La Land. They're investing in creating the most powerful AI model on the free market, and then before monetizing, they're scaling their AI models to their billions of users, which requires behemoth amounts of processing power. Fascists are stupid. Election ad revenue will give Meta a huge boost to 600 after earnings. That's a good point. Election ad revenue will add a lot to Meta. Excellent article by Motley Fool, why Meta will soon hit 1 trillion market value. But they're over a trillion. Maybe when he wrote this, it was low at that point. This was October 2023. They're 1.2 trillion, and he wrote this in October 2023. The stock price was 300. So maybe it was around 900 billion then. By every financial metric, Meta should be over 425 a share, as some analysts have already placed that as their price target, like Citibank. Well, she hit the nail on the head. It broke through 425. I think it peaked at like 550. Car company, wrong. Tesla is the leader in AI and is an AI company and will be a $10 trillion company, just a matter of time. What a terribly worded sentence. Thumbs down. Tesla, car company? Maybe you should read before spewing out garbage. Oh, I think they meant now read. Tesla is an AI company and way ahead of any other AI company. They're collecting over 125 million miles of data a day. And they are building data centers to store the overabundance of data, which will be vital down the road. No pun intended. Get it? Down the road? Driving down the road? Okay. Not that funny. Tesla will exceed 10 trillion market cap. Watch and learn. No way. There's no way that's going to happen. Buy Meta today before seeing 400 plus. Meta has solved all their issues with a simple solution. This pay for ad free move is a beautiful master move. This stock will be over 400 by December. You were right. It did break through 400. Here's May 2024. Listen to earnings call over the weekend. Glad I got into this on drop. Earnings sell-off was just an excuse for profit taking. Excellent opportunity for establishing a position in Meta. In my opinion, Oculus is exactly what Meta should be doing. In my opinion, Meta can afford the capex and stay a cash cow in the short term. That is just exactly what big tech does. Make money and then pumps it back into R&D. Point match purple toast. Perfect gift today, added more. Meta is the one of the few that has such solid earnings and beautiful margins. The revenue stream is solid like a rock. Meta is gaining market share from all its competitors. YouTube lost business, it has nothing to do with ad spending. Actually, both Meta and Amazon should be up on Google News. Speaking of YouTube, did you hear about their problems they're having with ad revenue? NSFW ads on YouTube continue to be a problem despite efforts to remove them. Advertisers are exploiting vulnerabilities on the platform. NSFW is an abbreviation not safe for work. It's used when sharing internet material that should only be looked at in private because it may contain offensive things or naked people. Who doesn't want to see that? Despite suspending millions of advertiser accounts, YouTube still struggles to completely eradicate explicit ads from its platform. The presence of these ads poses a significant risk to YouTube's revenue stream and may impact the user experience as well as legitimate advertisers. If you've been scrolling on YouTube in recent months, you may have seen an NSFW ad with sexually explicit content. I haven't seen that, but I guess it must be true. YouTube has been dealing with this problem for quite some time now. The company spokesperson said the ads violate the platform's policy and they will be removed. However, it seems YouTube's battle against NSFW ads is still ongoing. Reports about pornographic ads on YouTube first made headlines late last year. At the time, Google said bad actors might obfuscate content to evade detection and bypass a platform's monitoring measures. The ad in question was later removed. It's really hard to identify all these issues and remove them. It's like when people put ads on Craigslist to sell sex. It's just so hard to identify them because it seems legit, some ads. Nonetheless, in early June, more ads started popping up on YouTube. YouTube removed or blocked 5.5 billion ads in 2023, with 95 million of them containing adult content. That's a pretty small amount. Out of 5.5 billion ads blocked, only 95 million had adult content. So the others had kids content? Why did they block it then? YouTube suspended 13 million advertiser accounts in 2023 alone. The use of AI and large language models could help YouTube a lot by eliminating these sneaky advertisers. Of Google's 65 billion of revenue, 8.6 billion is from YouTube ads. Most of Alphabet's revenue is Google AdWords, but 8.6 billion is a pretty good amount of revenue. It's still about 12-13% of Alphabet's total revenue. Meta doesn't have this problem. I'm not sure why, but YouTube definitely has this problem. Do you like when I read these comments? I actually enjoy it. I know it's not digging into their financials, but it is learning about the company in some respect. Sometimes I do learn new things by reading comments. Sometimes I may not read a particular article, or there's something more obscure that someone mentions in the comments. It's not common, but it's happened. Mark, I wonder what Mark this is. Mark Z. Meta initiates a dividend and authorizes a $50 billion share buyback. It's gonna be a great year. I concur. Wait until their buybacks start. This is going to skyrocket. Why panicking? While we all know that eventually Meta will reach 600. Up and down, $20 is typical Meta. For longs, nothing is change here. Nothing is change here. I could not have said that better myself. How do you know it will reach 600? Do your homework, friend. It will never hit 600. That's pretty ridiculous. It will. It's got a massive moat that ensures almost guaranteed positive cash flow over the next decade. How do you know it will hit 600? I'm going to reply. 2 words. Inflation. That's actually 1 word, but I like to be idiotic sometimes. Inflation. Meta is so undervalued compared to the rest of the big tech, it will easily see the 600s. MSFT market cap already over 3 trillion, and it still has price targets to go over 520. I'll give that a thumbs up. Going to the DR in a couple of weeks, Dominican Republic or driving range. It just dawned on me that I bought 3 pairs of sunglasses, 6 vacation shirts, and joined Fabletics for some shorts. All based on Instagram advertising. Direct click outs to the advertiser's website for purchase. Meta is powerful. The only type of shorts I'll ever buy. Sorry, bad joke. That's not that bad, actually. Zuck should fire himself for doing such a bad job of losing billions. If it was any of his employees that has the idea of the VR and caused Meta to lose billions, that employee would have been fired. Learn to edit your comments so it does not sound like a 3rd grader wrote it. Learn how to edit your comments so it does not sound like a 3rd grader wrote it. I'm a keyboard warrior. Is that the right term? The people who say anything on a keyboard, but in person they'd be too scared to say it. It is interesting how when more employees are fired, the share price goes up higher. You would think investors would realize that less work would get done and the company would be unable to function as well, especially if thousands of employees are fired. Do investors actually believe thousands of employees were simply sitting around doing nothing? I don't think these people realize when you have a company with like 10,000 employees, I'm going to make this real straightforward. Say each division was a location, we had retail stores. So we had the New York division. Say we had 10 retail stores in New York. We sold food, maybe a grocery store. And then we have a California division, a Virginia division, a Florida division, a Texas division. And let's just pretend there's 500 employees at each division. So we have 2,500 employees. Say we close all the stores in Texas. We would eliminate 500 employees. Now we have 2,000 employees. That doesn't mean the people in Florida have to work harder. We just close those stores. Same thing at Meta. When they get rid of a division, say it's a product they're working on, and they no longer want to work on it, they just eliminate that division, those employees. The other parts of Meta are still running as is. Maybe if you look at the profits, you'll see why we closed Texas. Say we made $1 million in New York last year in profits on all our retail stores. And then $800K in California, 1.1 million in Virginia, 300,000 in Florida, and we lost 200,000 in Texas. That's just why we closed our Texas stores. We've been there 6-7 years. We won't make any money. Let's just open more stores in these states. When a company lays off a lot of employees, it doesn't always mean the remaining employees have more work to do. It may mean that, but oftentimes they're laying off employees because they're getting rid of that job. They're not doing it anymore. And if there is a lot of overlap between employees, sometimes getting rid of some makes your company more efficient. Because if you have 10 employees doing a job and you're all working 80% of the day, meaning 20% of the day you're just sitting around, and if you got rid of one employee, now everybody's working 88% of the time. It's not like you're overworking them. So before a company lays off employees, whether it's one employee or 100,000 employees, they definitely talk to management and make sure the layoffs don't affect the end product or end service. And if it does, they may have to rehire someone to fill that spot. And let's say a manager made a mistake. He thought his group had 10 employees working 80% of the time. And if he laid off one employee, he thought everything would be fine. But if the manager found out after laying off that employee, it kind of messed things up. The rhythm was out of whack. That employee had a key role in the company. And now they're providing a worse service. Then they would just hire someone to fill that position. Maybe not the person they fired, but they would just hire someone to fill that role again. I would ignore comments like this. It tries to prove a point, but usually it's someone who doesn't have all the information, who doesn't really understand how businesses work. And he says if anybody should be fired, it's multi-billionaire Zuckerberg, who can afford to be out of work. If he was doing a bad job, I would totally agree, because some CEOs just don't do a good job. But he orchestrated this company from scratch, and he's done a great job. There's currently about 70,000 people that work at Meta, so he supplied a lot of jobs. And I bet this person who wrote the comment never supplied anyone a job. And that's something to be proud of when you can supply a job, whether it's one person, 100 people, 1 million people. When you give someone the opportunity to take care of themselves and their families, I think that's a great thing you're doing. And from what I hear, Meta pays a really good salary. Most employees are really happy with their compensation. Meta down more than Google in response to Google earnings. The market is so hilarious when it comes to Meta. Snapchat sinks like a boat, like a rock. Its own earnings won't move it. People love to hate it, and in the end, can't deny how strong a business model this is. Cash printing machine. What? It all starts at home. If you cannot be a referee for your children or do not have the time and patience, it is simple. Do not sign up for any social media for your kids. What the hell is he talking about? So many bad parents out there. It's obviously parents that are allowing their kids to go on to social media. All types of programs to block your kids from seeing any of that stuff on their devices. I'm so confused what they're talking about. Are they trying to say parents shouldn't allow their kids on Facebook? I mean, I guess there's some truth to that, but what does it have to do with anything, with the company stock? And how could you possibly restrict your kids from going to a website? Maybe in your house, but once they leave your house, they can go into any computer and open up Meta or Facebook. It's not that terrible, Facebook. It's not like they're going on Pornhub or Dipsy or X-Hamster. Maybe sites like Frolic Me or OnlyFans. What about ManyVids? Or Quinn? Fansly, Literotica? What about those? Gap filling always happens with stocks. This thing gapped up from 400 to 480 after the last earnings. It's going to fill the gap and eventually go back up. Gaps usually get filled, that is true. I thought he was saying gap like GAAP when I first saw the word gap. But as I started reading his comment, I understood where he was going. The U.S. economy grew at a faster rate than expected in the fourth quarter, 3.3%. As long as the economy is in good shape, Meta will continue on the upside. That's probably true. The market sentiment is great now after the Fed rate talk. If Meta beats, it is poised to fly. Fly like a bird. My mentor has been Ricky, and I have gained a lot from her. I struggled in the stock market for several years prior to meeting Rick's Cabaret, the Gentleman's Club. But with her guidance and support, I was able to achieve success. I gained the knowledge, skills, and confidence I needed from her mentorship program to succeed in the stock market. She really did give me some excellent suggestions on how to manage his emotions. What? I thought it was a woman. How to manage his emotions? And avoid common issues like FOMO, greed, impatience, and fear of losing. These emotions could lead a trader to make rash decisions that have negative long-term effects. With her assistance, I was able to control my emotions and come to reasonable, well-informed conclusions. This sounds like a really legitimate comment. Someone replied to this comment, so that validates it as true, as accurate information because someone replied. Working with a professional has several advantages when it comes to investing. Their understanding of the market and experience may be the greatest advantage. An expert will comprehend the financial markets and the range of potential investment options far better. Okay, I can't read this anymore. This is ridiculous. Meta earnings are solid good. I like the addition of the word good. They're solid good. If they were solid, I'd be swayed, but solid good, I'm really swayed. PE ratio is unbelievably attractive, especially after the sell-off yesterday. Perfect time to buy Meta if you can hold for a few months or a year at least. There is no other tech company this attractive and with solid earnings. Folks, calm down. Yes, panic selling could take Meta quickly down by 15% to 20% to 419 to 394 by the weekend. But I then see the selling dissipating next week and for Meta to come back in coming weeks and stabilize around no lower than 450 to 455. Just for perspective, Meta hit an intraday low of 393 on 2/1 prior to the release of earnings later that evening. And then on February 2nd, after the release of earnings, the stock hit an intraday low of 453 before finishing the day at 475. So predictions of Meta collapsing to sub 400 on a sustained basis are ill-founded. Nice. I sold to early pre-open market, but still happy I did. Lock in profit. Good luck, everyone. I'm out until it gets a pullback, if it does. There have been 3 catalysts for Meta's recovery and hitting new highs. Twitter's demise and Threads introduction, AI, and good earnings, fueled by a tremendous amount of advertising. If you add TikTok, you will have another catalyst fueling an increase of 625. Is he saying if we acquired the company TikTok, we would go to 625? Or does he think they already own TikTok? I am not one for splits, but I suspect if Meta exceeds 700 to 800, it would split 10 for 1. I think that's an accurate statement. And that would stabilize it a bit. Today, it was up over 10 and finished off 6. But with a 10 for 1 split, that would mean it was up 1 and down just half a point. Numbers much more mundane. Mundane like your personality? I think the split will be sooner, more like 600. Their second biggest product is Instagram. Let's see what people say about Instagram. I was in love with this app. I was posting my daily life. I have this account from 2015. It's been more than 7 years. Oh my God, that's 9 years. I'm just joking. It was written 2 years ago. I can scroll and see myself how I was in 2015, then in 2016, and where I went to. So it's my photo journal. Do you have no idea how much I am attached with my gram? I cannot sleep, and to be honest, I am addicted to see how people are so creative. What's the cons? Now I am frustrated with the fact that my account got suspended without any reason. I never ever violated any committee guidelines. I never comment on other profiles. I never use bad words on other profiles. I never take money from the client where I am not able to deliver. What? I always say no when I am not able to work for clients because of my busy schedule. What's this person talking about? They have a business, I guess, on Instagram? Unprofessional Help Center. Center spelled C-E-N-T-R-E. I think the person may be British. I think that's how they spell it in the UK. There are tons of commercials that disrupt my purpose on Instagram, and the help center is useless, a total waste of time. Have not been able to log into my account. It's also disappointing that Meta sent me a link to create a new account. I want to recover my old one, not create a new one. Only the social connection with family and close friends, to be honest. That's a pro. Other than that, it's a waste of time. Well, it is social media. It's entertainment. Cons, there is no proper support for users. I switched my account to public after posting my Christmas party pics. You don't really pay for these apps. It's all free. The way they keep it going is advertising revenue. So you're not going to get the best support. If you pay for something like Netflix, you'll get support. But when you get a free app, you get what you pay for. Instagram used to be cool, but not so much in 2022. The pros. Instagram has a decent algorithm back in the day where your followers that actually follow you would get to see all your posts. The last few years, Instagram has taken a nosedive. Ay caramba. Constantly changing the app and algorithms. Like I have stated above, the app has changed so much in the last few years, it's not very beneficial anymore for artists, musicians to get in touch with their followers. I guess a lot of these people have businesses on Instagram. Pros, good app if you don't lose access to it. Cons, I've been using the app for years now and recently have had issues logging back in due to two-factor authentication not set up correctly. I've submitted lots of requests to Instagram to help me for weeks and they have not responded. Poor baby. Easy to use but no different. Pros, most features are similar to other apps like this one. Cons, nothing different than Snapchat or other software. Never ever worked for my business. Pros, allows you to display nice imagery for your business, helps you find and connect with similar businesses. Cons, almost nothing on Instagram is good at the moment for me. Ads don't deliver good results. Reach is always extremely limited. Absolutely zero customer support. I used to advertise on Facebook to promote my business. I don't think I've ever gotten anything legitimate from it. It's hard. Advertising is tricky business. It's hard to reach the right people. You can't really look at results when you advertise. You just have to do it a lot. And then things eventually come together. If you're looking for instant gratification, you'll never get that when advertising. Sometimes you advertise for years and you can't tell if it's working. But if your business is making money and growing year after year, it's probably working. It's not the easiest to quantify. Even if you ask customers, how did you hear about us? Sometimes they just forget. Or sometimes they would say, yes, I got a postcard in the mail because they received a postcard the other day. But they don't mention the 20 other times you left an impression with them. That's also part of it. You have to hit people from so many different angles. Eventually, they buy your product or service. Not an Insta fan. Pros, there are a handful of artists and bands that I follow on Instagram, as well as pages related to pop culture and collecting of specific types of merchandise. Cons, it just all seems so pointless. Not sure I understand the overall appeal of this particular piece of social media versus posting something on Facebook. Major time waster, I had to uninstall it from my phone. God, kick them while you're down. You had to uninstall it? Just stop using it. Don't uninstall it. The worst social media app online. Isn't that contradictory? A social media app online. Pros, connection with other photographers, gaining ideas to better promote my business, gaining knowledge of locations for photography, equipment, updates, etc. Cons, zero help from the developers, deleted 2 accounts without giving a reason, would not let me back into my accounts after changing passwords. There is no email, phone, or text support. Terrible experience, had to deactivate. Pros, good for long-term storage of posted media. Cons, very ad intrusive. What do you expect from a free app? Algorithm keeps suggesting unwanted material. That's a problem. That's a real big problem. Instagram shadow banned my profile again with no reasons. Pros, nothing now. I would prefer Twitter or TikTok for 100 times. Cons, everything, especially when they deserve the right to decide on your own comment and to obscure your profile for any other user in a platform. I'm not following. What the hell are they talking about? No support, killed account for no reason. Can't they just have nicer words, like hurt the account or euthanasia? Not killed the account. Pros, even after we got all the requested proofs submitted, company info, photo of holding the code in the hands, no reaction, account and all the work killed, never did anything bad. Cons, with this attitude, nothing, total ignorance, reminds on that movie Idiocracy, kind of like your comment. Horrible customer support. I don't know if their horrible customer support has to do with the integration of Facebook, but I don't understand how you can even take a risk in promoting on Instagram without a human being able to assist you through technical issues. Pros, posting is easy. It's not overcomplicated like Facebook. Yeah, Facebook can be a little overcomplicated on the advertising front. There are a lot of things to choose from, so I do know what they're talking about. Cons, the worst customer support I have ever experienced. There is no human to reach out. If you submit a ticket, you never have any contact you back. Could be better. Pros, nothing. I not a big fan. Me Tarzan, I not fan. I think it need to be different. It's too much like all the other site. All that other one site. Cons, it's too much like Facebook. I think they need to make it somewhat different. Then it is everything all the same. I lost a few brain cells reading this one. Horrible for teen mental health. I think a lot of social media is horrible for teen mental health. Pros, the site works and loads when you type the URL in. That's a good sign. Cons, Facebook's own research has shown that Instagram is bad for teens' mental health. This platform makes people very narcissistic. I believe narcissistic means someone that helps someone else cross the road. Pros, I like that you can interact with others. I like that too. I don't like that I would a lot of times get notifications from things that I didn't want them from. Got a lot of spam, so I quit using IG. It just wasn't for me. A little rhyme at the end. I like that. IG wasn't for me. Why must me resort to social posts for business? Pros, it's the hot topic. It's what's in. Young generation feeding frenzy. Cons, selling out, creating a fake advertisement and message to others, catering marketing to only younger crowds. The title, it's good for use. Pros, it has helped me to get new friends over the world. Cons, promotion, followers, like, get friends. Wait, it's a pro and a con? Get friends? Instagram, a passing fad. Pros, I honestly can't think of a single thing positive to say about IG. I hated it when it was popular, and now that it is dying, I still hate it. It's dying? Is it sick? I couldn't find anything more recent, but IG had 90 million users in 2013, 2014 300 million, that doubled to 600 million in 2016, and 2 billion by 2021. That's a lot of users, 2 billion. So it looks like there's 2.4 billion active IG users, which is 1/4 of the world. So I don't think it's dying. Maybe it's not growing as much as it used to. Here are the most popular social media platforms at the end of 2023. Facebook, 3 billion. YouTube, 2.5 billion. WhatsApp, also owned by Meta, 2 billion. IG, 2 billion. Meta has 3 out of the top 4. WeChat, 1.3 billion. TikTok, 1 billion. WeChat is Chinese owned. TikTok is Chinese owned. Facebook Messenger, 930 million. Douyin, Chinese owned. Telegram, 700 million. And that's owned by a Russian company. Snapchat is owned by Snap. I think the next 3 are Chinese companies. Twitter, owned by Elon. Pinterest, 445 million. And that's an American-owned company, Pinterest. Here's some 5-star reviews. Lots of 5-star reviews. Pros. Instagram offers several key benefits, including the ability to engage visually with impactful images and videos. This sounds like a bot. Foster a sense of community through features like stories and live videos. Raise awareness about available services and support. Reach a wide audience and diverse audience. And build and reinforce our brand identity. These advantages make IG a valuable asset for connecting with veterans, sharing information, and building a supportive community. Building a supportive community? What the hell is that? I like absolutely everything. On Instagram, I can follow news in the fashion world, bloggers. Sometimes the application crashes with new updates. Game changer. I have found so many new friends and customers using IG. I even met my husband thanks to IG. You can edit your photos, even sell your own products through IG. Messaging is very easy to use. The whole platform is addicting, like a drug. Cons, so far I haven't had one issue with IG. Every day I love it more and more. What a wholesome comment. Pros, the posts, the ease of looking for something or someone and passes time. Cons, sometimes the system slows down in fake news. Okay, what do you guys think? Lots of comments, lots of information. Not sure how it helps us analyze a stock, but it's fun, I think. Talk to you later.